And so we have these constraints, and I believe this is why the market is somewhat calling the Fed's bluff. And so, Jay Powell goes, hey, you didn't listen to me correctly. There's going to be pain. I don't know why you guys think this is bullish. This is going to be bad.
In today's video, Mark Moss, host of The Mark Moss Show, discusses his claim that the crypto sector will never experience another bull run, and how it relates to regulation. Before listening to him, please ensure to smash the like button and subscribe to the channel.
The dollar's going to continue to trend down to zero. So it's not like they've saved it, it never goes down. And so I'm talking about over the next, 12 to 36 months. Ultimately, sure, of course, they're going to have to wreck the dollar. We are in a debt-based monetary system, which is basically a fiat Ponzi scheme, right? And so if they don't continue to always inflate the currency, the whole system crashes. And so they're going to have to do that. We're already seeing this. So we saw massive numbers this week. The Fed is paying out more interest because they've raised rates than they're receiving in. And so they're technically insolvent. The problem is that now they're not giving money to the Treasury. So the government now is starving for money. At the same time, they're trying to pass this enormous omnibus bill, and they need more money. More deficit spending, but they're not receiving the money. And so we have these constraints, and I believe this is why the market is somewhat calling the Fed's bluff. And so, Jay Powell goes, hey, you didn't listen to me correctly. There's going to be pain. I don't know why you guys think this is bullish. This is going to be bad. But the markets are somewhat calling their bluff because of maybe what Rick Rule is seeing is we understand the natural constraints that the Fed and the governments are in. They are going to have to print money. I just think that they're going to continue to push the pain longer than most people. And then eventually, of course, sure, they're going to pivot. They're going to blow this thing sky high. Things are going to crash bigger, faster, deeper than they thought they would, a la March 2020. And I expect a sort of a V recovery. They'll blow this thing sky high. We saw 700 billion pledged in 2008. That ended up to about 1.5 trillion. We saw somewhere between 7 to 11 trillion in 2020. The next one's going to be 20 or 30 trillion. And the dollar will, of course, continue to decline in value. So he's correct. It's just over what time frame? Unfortunately, didn't get through 2008 without taking a massive beating. Southern California, nationally over that 4-year period from about 2007 to 2011-12 when it finally bottomed, it dropped about 30% nationally. But in Southern California, it dropped 60% in 12 months. It was insane. And so one thing that I've learned is that there's no such thing as the real estate market. There's thousands of markets broken down by size, type, price, etc. And so what we're seeing is, to the point that you've made, yes, in some locations like Seattle, San Francisco, we're already crashing worse than we did in 2008. So we're already worse. However, in some markets like Miami, it hasn't crashed at all. It's flat. Many markets in Florida are flat. Some of them are even still going up. And so how is it that some are worse than 2008 already? And then some are still flat, or some are still going up. And that's because, again, there's no such thing as the market. There's thousands of markets. And what we've really been seeing is two big mega trends in real estate. The first is the demographic shift, or really the baby boomers. They're retiring. They don't want to live in the cold. They don't want to live in the snow. They don't want to plow their driveway anymore. They don't need the big McMansion anymore. The kids are gone. They want to move somewhere where it's warm and they can play golf and tennis or pickleball now. It's the big sport. And they can play that all the time, right? And so they want to move to low tax states, and they're moving. So there's then that big shift. But then the pandemic brought another big shift, which was the work from home shift. But more importantly, it was I want to move to pro-business states that don't shut my business down, don't lock me inside. And so we've seen massive influx into states like Florida. And so that's why we're seeing that. They're leaving California, they're leaving the Bay Area, they're leaving Silicon Valley, et cetera, and they're moving to these areas. And so I think that will continue. The way that I look at the real estate market kind of moving forward is, if you were to put a little bit of water on a counter, it would kind of it would pool, and you'd have like little pockets of water. And I think that's what the real estate market will do. Some areas will continue to do really well. Some of them are going to do really, really poorly. Specifically, the areas that are going to do very poorly and are doing very poorly is we have to divide the market into new home construction and existing homes. Because new homes, we have giant publicly traded corporations. They built all these homes. And they just need to get these things out. And they're marking them down. Even if they sell them at a loss, let's just get them off the books. But existing homes are different because people locked in probably some of the lowest rates we might ever see, 2%, 3%, 30-year fixed mortgages. And those people with those existing homes do not want to sell their house with a 3% mortgage to go buy a house with a 7% mortgage. And so they're not selling. So the inventory is very, very low in existing home sales. Now, some people might say, well, Mark, you don't understand. There's going to be massive job layoffs and whatever. Maybe. We'll see what happens. But I think you have to understand there's differences in markets. Look for supply and demand. Where are the areas that have massive demand? Where are people leaving? And then look at the difference between the new homes and the existing homes. For 2023 and kind of maybe for the next year or two, the sectors I'm looking at, I think obviously commodities, real things, energy, right? Those are the big buckets. Vladimir Putin, he is fighting the fiat money monster, if you will. He said it publicly many times. He said that the age of artificial wealth is over. And now it's about real wealth or commodities. And so, energy, metals, minerals, et cetera, I think is going to do really well. Gold appears to have bottomed out. It's done really well over the last 30, 45 days. And we're seeing real things that I think we're going to do really well. I think equities are going to continue to trend down. I think the PE ratios, this is what a lot of people don't understand with stocks, or they miss, I should say, is that let's just say Amazon, it's on sale, right? It's a world dominator stock. I believe that Amazon will be a bigger company in 5 years or 10 years from now. I believe it will. It'll probably have more market share than it does now. It'll probably be doing more revenue, but the stock could actually be lower because of the PE ratio. We can take a company like Cisco, for example, which is still a dominator company in its industry, and it's never exceeded its high that it reached in the 2000 dot-com bubble. And so I believe that as the Fed keeps interest rates up, the PE ratios will continue to trend down. And so I think equities, specifically around the tech stock equities, are going to continue to do horrible for the next couple of years.
A lot of folks know you as can I say Bitcoin maximalist?
Sure.
Okay. But they'd be surprised to hear that you don't think we'll see another crypto bull run. Is that a correct statement?
Yeah, that is a correct statement. I've made quite a few statements about that. I've received quite a bit of backlash from the crypto community about that. But yeah, I would say categorically, I don't think we'll see another crypto bull run.
Let's talk about Bitcoin specifically.
Yep.
Will we not see all-time highs again for Bitcoin?
So, what somebody like myself, maybe as you said, a Bitcoin maximalist, but a Bitcoin person, we're very clear to say Bitcoin, not crypto. Not saying that Bitcoin isn't a cryptographically secured currency. It's not a cryptocurrency. It's just that when we talk about Bitcoin, we're talking about Bitcoin, and when we talk about crypto, we talk about crypto, but we don't interchange those two.
Okay.
One of my favorite analysts, Lynn Alden, said, to confuse Bitcoin and crypto means you understand neither. And so it's kind of like that. And so when I say that crypto as a category, I'm making the claim that it won't see another bull run as a category, but I believe it's massively bullish for Bitcoin.
Okay.
So I believe Bitcoin will go on to another bull run, and even a bigger bull run than it might have gone on before once we get rid of the crypto piece.
Okay. So you want to see, we need the washout is what you're saying, but I'm going to ask you, make the case for Bitcoin now, because unfortunately, or maybe it's not unfortunately, that people do throw in Bitcoin where we're talking about crypto, and especially with the fallout of FTX, and folks who are not as in the know as you will say, well, why should I still believe in Bitcoin, given the shakeout we've seen in the space?
Sure. So about every 50 years, for the last 300 years, about every 50, there's a technological revolution. So we have lots of new technologies, but about every 50 years, there's a technological revolution. There's been 5. So we had the Industrial Revolution. We had steam engines and railways. We had electricity and steel. We had oil and automobiles. We had microprocessors, which brought us telecommunications, internet, etc. And now we're witnessing another technological revolution, and that is Bitcoin. And the revolution is decentralization. Now, what's interesting about technological revolutions is they change the course of humanity. Obviously, electricity did, automobiles did, telephones and internet did. They changed the course of humanity, but they also drive financial markets. What's driven the markets for the last 50 years? Telecom, internet. What drove before that? Ford, GMG. What before that? Oil, steel, right? And so that's what we're witnessing. Now, Jack Mallers said that crypto is an arbitrage on the trend. An arbitrage on the trend. So we have a real technological revolution happening, and that is decentralization. All of the cryptocurrency assets, because they can't be more decentralized than Bitcoin, they try to innovate on something else. The problem is the innovation isn't something else. The innovation is the decentralization. And so you could look at all these other crypto assets sort of like a DDoS attack or like a denial of service attack against Bitcoin, where in a denial of service attack, you'd have spam that would flood a server that would kind of prevent it from doing what it needs to do. And Bitcoin is sort of the same way. Stansberry has a bunch of newsletters that come out. I get them on my email. I get flooded with emails and Medium articles all the time about the next Bitcoin. The Bitcoin went up by 10,000. This one will go up by more. And so all of these investors, they think, oh, we're just trying to make more US dollars. And so this one could go up more or faster than Bitcoin. So I'll buy that instead. And of course, all assets move, all prices move on supply and demand. So Bitcoin has a supply cap of 21 million. If more people buy it, more demand, that pushes the price up. But the 1,000, 5,000, 10,000, now 22,000 crypto assets pull the demand away from Bitcoin because most people are not educated enough to understand what's going on. And they go, oh, this is the next Bitcoin. I can make money on it. I can make more US dollars. Whereas Bitcoiners, and I know you have many of them on as well, the Max Geisers of the world, like we're on a different mission. Like this is a decentralized revolution that will literally change the world. We've solved the oldest problem in humanity, which is how do I custody my assets in a way that can't be manipulated, stolen, and if I want to transfer it, it's censorship resistant. And so we've solved that problem, and it's a big deal. It's a big deal that's going to create a lot of value, more value than we could ever imagine, and most people just don't understand that piece.
So, okay, so you made the case for Bitcoin, but why do you feel crypto has seen its last bull run? There are other
the reason I would say crypto as a category had its last bull run is because of what's happened with FTX and the potential regulations that are coming in. So you first have to understand how crypto as a category works. And so Sam Bankman-Fried gave an interview earlier this year, I believe in May, with Joe Weisenthal and I forget. And he explained, he said, let's say that you create this box, and then this box is like this world-changing protocol. And then you create this box token. And then you trade this thinly traded box token to make it have a perceived value. And then you let other people start trading it. And so he kind of highlighted the way cryptocurrency works. And so the crypto market as a category blew up because venture capitalists love it, because traditionally they would have to invest into a venture capital fund, wait 10 years for a liquidity event. But today, or in the last couple of years, they've been able to invest into these crypto assets where a creator would create this box token, as SBF called it. And this venture capital would be able to come in and buy these box tokens for 3 cents and automatically turn and flip them for 9, 12, or 26 cents into the market, which of course they love. They've never seen that before, which of course started bringing more and more and more venture capital, hundreds of millions, billions of dollars into the space. Then they started pushing all the media, the advertising, the Super Bowl ads. And so it created this massive buzz. And everybody loved it. As SBF said in that interview, first they trade it with Alameda to give it perceived value. Then they advertise it, and then the market, retail, jumps in and think there's something there, even though there's not. Mm-hmm. And I know that may sound cynical, and his interview was cynical, but that's the way the majority of crypto, not the majority, all of it worked. I believe all but, I think, 4 or 5 cryptocurrencies, all the other ones had a pre-mine and a token sell. All of them worked that way. And so the reason why I'd say as a category won't have another bull run is because I believe that now the SEC, the CFTC, Congress is going to be forced to act.
Yeah.
The SEC is there to protect consumers. They have obviously failed, right? They've done a horrible job. They should probably just shut down and disband. But they have egg on their face, and they're going to be forced to act. We have, Elizabeth Warren and Maxine Waters are all calling for regulations. They're coming. And a lot of people push back on this, and they didn't like when I said that because they say, Mark, you don't understand.
Right.
If the SEC regulates this, these tokens will just go offshore. They can't stop innovation. And I agree, right? They can't stop innovation. But if these tokens go to these offshore jurisdictions with no SEC oversight, the U.S. venture capital companies are not going with them. That money is not going. If it goes into a regulated space where these tokens have to go through regular securities, registrations, it just changes the landscape. So I'm not saying it goes away, but I think the days of 2017 and 2020, 2021, where the entire market cap went up and you could close your eyes and throw a dart, I think those days are over.